All right, joining me more on the markets now, Dan Rohinton. He's portfolio manager at IA Global Asset Management, one of our regulars here on BNN Bloomberg. Dan, good to see you.
Good to see you.
We're kind of moving into an interesting fall stretch here where stocks have had a lot of momentum through the summer. They're hanging around all-time highs, and yet we're simultaneously having a conversation about where the economy is headed from here. How have you been positioning the markets recently based on that?
I think it depends on really which subsectors of the markets you want to focus on, right? But to maybe zoom out on your broader macro question here, it's really, is the economy having a direct role to play on Wall Street? And I think that correlation has been evolving and basically breaking down in the grand scheme of things over the last decade and decade plus. The reason behind that, John, is that the knowledge economy, the information economy, is not the same thing as Main Street. So the consumer sector is seeing signs of weakness, so low-income consumers are seeing a lot of pain. But that's a Target issue. That's a Dollar General issue. That's a Ross Stores issue. That's not a Microsoft issue. And I think that's fundamentally the reason why more mixed economic data in Canada, in America, and in many other parts of the world is detached from the stock markets in those very same geographies.
And I did have a guest earlier who brought up memories of the dot-com boom and bust. So even though, the companies that are leading the AI revolution or the spending tied to the AI revolution have more money than pretty much any company on earth, so they're in relatively good shape, it's hard for people not to wonder if we're seeing similar bubbly themes to what we had seen, 20 plus years ago.
So I think you got to think about it in two different ways, and it's important to keep when you're going through these types of evolutions, a flexible mentality. So exactly the point of capital overspend, huge capital cycle that led to what was known as the dark fiber moment. So the IT bubble in the 2000 era is probably better characterized as the telecom bubble because that's where the losses really were. But the question here is, are those leaders in these very same companies completely unaware of what happened in 2000? Not at all. This was their trauma. This is the global financial crisis for them in their very same sector.
They fought that battle.
They fought that battle. They fought that war, and some of them lost that war.
Yeah.
So they're coming back. So you have to think, are they as informed about that history? I believe so.
Yeah.
But it's important to keep a level head. You never know. And one thing that you should focus on for our friends across the screen here is, are the models getting exponentially better or not? I think that'll really guide the pace of what the investment in chips and all the infrastructure is going to look like, not next year, not this year, but the year after that, and so on and so forth.
If they can say, look at our business, we're doing incredibly well because of all this, essentially.
And are the IQs, the average IQs as a very rough, crude measure, getting 1 point better for every 10 billion we're spending, or 20 points better?
Okay.
That'll be the tail of the tape.
I know we've talked a lot about big tech, and we've talked about record highs in North America, but you're also watching the situation in Japan where the Prime Minister announced that he was stepping down. And what is it about that developing story that has caught your eye?
So we look at the U.S. and Canada politics as a spectator sport. I think it's important to keep one eye open for Japan. The reason for that is the Japanese economy is very large, one of the biggest in the world. This prime minister was one of the biggest fiscal deficit hawks that Japan's had in a very long time. And who will likely replace him is going to be someone with potentially a pivot more towards the left centrist measures, or more towards the fiscal loosening, easier money measures, similar to what the Abe era has been. And the reason why it trickles down across the Pacific Ocean to us in North America is Japan is a huge foreign buyer of treasuries. So if Japan is seeing rising interest rates, because what's unique about this election cycle in Japan is we have an inflation issue in Japan. So inflation is a topic here, but it's going to be a topic there. Yeah. And Japanese long bonds are rising. And what that means is that if you're a Japanese investor that's got excess capital, U.S. treasuries, Canadian bonds might not be as good of a place to invest as your local Japanese government bonds as well.
Interesting, because, we were talking about how gold continues to reach all-time highs, and it feels like there's sort of a whole range of factors. Political uncertainty is one of the factors, so maybe if there's constant changes in leadership in different countries, that could be one of the factors behind it, but also this general view that central banks around the world have shifted some money away from things like the U.S. dollar into gold. And I think it was Goldman Sachs last week that sort of did some rough math saying that if just 1% of money in U.S. Treasuries were to shift out of that, they wouldn't be surprised to see gold get to $5,000 an ounce.
There's not a lot of ounces out there in the world.
Yeah, yeah.
So.
Okay, so how are you thinking about your own sort of investing philosophy? What are you talking to clients about, given all of this fall?
I think it's important to think about the year that we've had. We've had a lot of gyrations, but on balance, it's been a very strong, constructive year across the board. And the economic weaknesses, in the grand scheme of things, still are on the baseline of full employment in the United States and deteriorating employment, but still reasonable levels in Canada. So I think a bit more defensive, a bit more cautious, and tactically, I would say actually maybe lean a bit more into some of the losers, the AI losers in the IT space, because those companies are trading at almost discounts to the market in a way that we haven't seen in a full generation.
I'm trying to think what comes to mind. I mean, I know had it pop recently, but people have endlessly talked about like Alphabet as sort of like looking at their valuation versus others and saying it actually looks somewhat reasonable. Are you saying that the ones that have lagged performance in big tech?
Yeah, that's a perfect example of that. But Alphabet's a bit more in the middle ground where they're actually an AI disruptor if they play their cards right.
I see.
But think of software companies like a Workday, a ServiceNow.
People are worried
Salesforce.
about those businesses
Exactly.
in AI.
Yeah. So if you have a contrarian hat to you, then this might be a place to go.
Okay. Thanks for putting on your hat today for us. Appreciate it, Dan. Dan Rohinton joining us, portfolio manager at IA Global Asset Management.